Start ahead, Vishal. Start.
Hello. Hi, everybody. How's it going? Everybody out there who's wondering about decentralized finance, and I've got the right person for you. Firstly, again, hello, everyone. Welcome to Pebble, a startup podcast which is powered by Co-Create. This is specially built for startups in deep tech and entrepreneurs who are making the news. I'm your host and founder, Vishal Krishna. Good to see you all. By the way, you can ask as many questions as possible. We want to make it interactive, right? Please ask, go ahead. Today, I have a friend who I've known for 2.5 years now. She's been in the news in blockchain. She is Aanchal Thakur, the CEO of Spherium. And Spherium is creating a decentralized and borderless financial system. Aanchal, as co-founder of this company, is going to take it to places. But let me tell you some information which you won't believe. She's a finance professional who has a penchant for technology. She has transformed herself. She loves blockchain because she believes in the immutability and transparency of this technology. Blockchain and crypto, by the way, she says is a 2 trillion market opportunity or in market size. Blockchain applications in payments and smart contracts, digital identities, and government initiatives are going to be a rage in the decade. So let's make a shift to blockchain. Hi, Aanchal, how are you?
Hi, Vishal. I'm good. How are you?
I'm very good. I'm excited. Thank you for being on Pebble. It's built for students and new founders and people who want to start up. So thanks so much. And I'm in love with what you're building. Tell us what Spherium is all about, and then let's get deeper into what decentralized finance and blockchain could be. Go on.
Yeah, thank you so much, first of all, for calling me here. I'm always excited to talk to you, whether it is offline or online. So it's a pleasure always.
No, thanks for the compliments. I feel the same about you. Yeah. I'm excited with what you do. So let's tell us what you do. Go on.
Yes. So Spherium Finance, basically, we're building a DeFi platform. So we saw two major issues in the current DeFi ecosystem. So for newbies, decentralized finances, we are actually decentralizing the finance space, which is right now owned by the banking system, which is there in the traditional bank, ecosystem that we have. We are making it move to Web 3.0. And in DeFi space, we saw two big issues is that none of the application was all in one. Yeah, every product is it's doing a small part, like if it is a bridge or it is a swap or every product or market. If you see the biggest projects in the space of blockchain and DeFi, they are solving just one issue. They're not creating an all-in-one solution. There is no platform where a user can go and get everything that they need, first of all. And there are so many blockchains. I mean, the number of blockchains is increasing every day. Recently, Velas chain came into place. We had Ethereum, we had Solana, we had Polygon, we had Binance Smart Chain, Avalanche, Phantom. So with so many chains, people get confused. Which chain should they keep their funds on? How to use which particular application works on for this particular chain? So it is so confusing, and that's where we saw that there is a huge market opportunity, and especially for the layman, for the people, for the next billions and trillions of people who are going to come into space of blockchain, how to make it easier. So we are creating an all-in-one platform which is cross-chain interoperable. So all the chains we are going to support, all the most prominent chains at least will support, and we are going to add all the applications, whether it is DEX or swap or lending or borrowing or staking, all the applications in one platform for all the chains. So that's what we are doing at Spherium right now.
Okay, let's break this down. There's so many pieces out there. To summarize your first statement, there are too many blockchains. A lot of people are building in multiple blockchains and offering these services. So as a user, I need to know where am I putting in my funds. That's one application, right? So that's where Spherium comes in. Can you give us an example, a real world, say somebody is building on Ethereum, a finance platform. And in this case, Spherium will say, okay, this is somebody who's offered this service on Ethereum as a blockchain. And how do you manage your fund? Because in the end, it's also a peer-to-peer lending kind of a system, right? That you're looking at. Right. You want to explain that so that let's flesh that out and then go deeper into context.
Right. So to give you some example, like if you have a decentralized application or DEX, which is Uniswap, which is the most common DEX used in the world, or PancakeSwap, which is the DEX for Binance Smart Chain. people know about these names, but if you keep your funds on, say, Binance Smart Chain, you cannot use Uniswap, because Uniswap is only for tokens which are ERC20 or based on Ethereum blockchain. And if you have your funds kept on Binance Smart Chain, because the transaction cost on Binance Smart Chain is very low compared to Ethereum, then you cannot buy a token which is listed on Uniswap, because you have tokens on Binance Smart Chain and that particular token is listed on Ethereum blockchain. On Spherium, what we are doing, every token which are going to be listed on that particular block, on that particular platform, they have an option to list on all the chains which are supported by the platform. So as a user, when you'll go there, you'll see that you can buy, whether you might have your token or your own assets or your funds on any particular chain, you can buy or sell the tokens which are listed there. Also, you can stake those tokens. So I don't know if our viewers know about it, but DeFi returns or DeFi yield farming is giving much higher returns compared to our traditional banking. So traditional banks, you get 5-7% return
On
your
an FD,
FDs.
yes.
On an FD normally.
Now it's gone down to 5.
Yeah,
5
gone
to
down
4%.
to 4
Yeah.
5%. On DeFi, minimum the returns I've seen is 8%, and maximum is in few 100%. So you can actually triple or 4 times also your assets within a year.
Okay.
So
For those watching this, you have to know that she's talking about a KYC platform. That
Yes.
means when you participate in this, there's KYC. It's not gambling, okay? She's
Yeah.
very keen to say that. Go on, Aanchal. You could say it
Yeah,
also.
we want to make sure that everything is as per the regulations, whether of US or India or anywhere. We want to keep the things as clean as possible. So you take your tokens or your assets, you convert your tokens to your money to tokens, stake them, get a better return. And whether you use any chain which you're comfortable with, you'll have those chains available on our platform. So the tokens which are going to be available for staking on Spherium will be available on almost all the chains which are very famous right now. So just making it easier for users as well as for project owners. Basically, we want to make the cross-chain world open. We don't want them to be associated with just one particular chain and lose out on the user base which is available on another one.
Phenomenal. I'm thinking that this will be cross-border KYC as well if I participate, right?
Yes. So KYC, most of the countries normally require some standards. And right now, the KYC providers which are providing KYC solutions all over the world actually have just don't require your passport or ID or address proof, but also check for make you take a photo of yourself at that point of time. See that you're really a human. It's not a bot which is doing it, and they match the photo as well as with your ID proofs to ensure that there is no such kind of, no one is trying to fool the system. So
are you on beta, Aanchal, at this point of time? Yes. Are you on beta? Is it available only on request, or people can start using Spherium right away?
Our product has been on beta testnet, public beta testnet for 8 weeks. Open to public, anyone can go and test. We are coming on mainnet on 31st of January. So in the next few days, we'll be on mainnet. So our bridge will be live. Then we'll make our DEX come on mainnet also in the first week of January.
Okay, for a complete layman, let's say complete layman, say somebody who's just watched this show and says, okay, I want to get my fiat currency converted to some tokens, and now I know I'm going to get returns about 10%, maybe more, right? Because this money is going to go into somebody. It's almost like lending in a way. So this is going to finance some project. It could be an SME, it can be a freelancer, it can be anything globally, right? This is a nice aspect of it. I want to come to regulations also in a bit, but for a layman, they can come buy tokens. Is it Spherium tokens or is it tokens in the market already? How would it be distributed to the public? So how should they go about it?
How they can actually start using a DeFi platform is, first of all, they have to convert their fiat currency to a crypto asset, whether it is USDT, USDC, which are stable coins, or Bitcoin, Ethereum, or any of the top coins, which is available on that particular platform. Now, in India, we have many centralized exchanges where you can just connect your bank account and convert to crypto assets and move to a DeFi platform. We are also going to integrate but fiat on-ramp and off-ramp providers so that people can actually convert their fiat currencies to crypto using our platform itself. So most of the DEXs don't offer this option. Most of the decentralized applications don't even offer KYC. We are going to integrate all these in our application so that users can just connect their credit card and make a payment and invest that amount into the platform. Now, the returns cannot be only just because of the lending that you mentioned. It is possible that that amount is not lent, but it is kept in liquidity tokens on the decentralized exchange. So on a decentralized exchange, if I try to explain the difference between decentralized exchange and a centralized exchange, is that on a centralized exchange, they match the orders peer to peer. If someone wants to sell at a particular price and someone wants to buy at a particular price, they match the order and the order is executed.
Okay.
But there is a server behind it. On a decentralized exchange, there is no such matching of orders. The owner of the token creates their own pool, puts that money inside, and lets people buy and sell the token on the decentralized exchange. Now, it is in our platform when we launch staking, before lending, we launch staking and yield farming. So when people will actually add liquidity, they will be adding liquidity to the DEX, so that the owner of token may not have to buy everything. The owner of the project may not have to buy all the tokens and create those pools, but the users can also add those pools and earn return add higher return, because they're helping the project list on a DEX.
Okay.
So
Okay.
that is also.
And is there a timeline that I could choose that I want these tokens distributed for 6 months and I want to withdraw it in 6 months? Is there a cap there?
In case of most of the yield farming applications, there is no time limit. You can withdraw anytime. Your rewards are also available at any point of time. Your rewards accrue every second, basically. So you can withdraw anytime. Yeah.
Okay. Okay. So is there a cap to the money also now?
Not that I've seen, to be honest.
Okay. So I can put in 100 rupees also.
You can put in 1 rupee also. You can put a few cents. The application does not, but you have to cover the transaction cost.
Okay.
So
correct.
yeah. So transaction costs on Ethereum are right now between $30 to $100. So obviously it's not very feasible for most of the smaller investors to participate. But on chains like Binance Smart Chain or Polygon Avalanche, the transaction costs are between 1 cent to few 10-15 cents. So that's quite cheap to use.
So you are saying that try and buy in with 100 rupees and you can increase your cap as you see the money grow, right? Yes. And the KYC is done in my end because so that's for regulatory purposes. And would you also tell the customer that, look, this is what, because you're a blockchain and focused on transparency also, will you say that this money has gone into a particular project or a particular trade? Or is that something that I as a person get dashboards on a regular basis?
Once the algorithm is on mainnet, when I say we are going on mainnet, that means we are leaving control of the algorithm. We don't have control on your money. It is the application which has the control. You decide the tokens are in your MetaMask wallet. You decide which particular token you want to provide liquidity to, where the money goes, when you want to take it out. It's in your hands. Basically, you are interacting with smart contracts.
Okay, brilliant. So that other person is already verified. You'll know, okay, you are offering liquidity to X person, and this is his verification.
So for KYC, we are going to use a third-party service provider like Synapse, or we have another service provider with whom we are in discussion with. So those organizations are actually approved with we are only looking at some providers who are registered and have approvals from US government also. So they have all the licenses in place to hold the KYC documents for all these people. And everything is online. Basically, you don't have to do any manual thing. You just, it takes a few minutes. I think I did my KYC on one of the application within 30 seconds.
Okay.
So yeah.
Okay. Now I want to go more into the larger aspects of the business now. Spherium makes money on the liquidity event, or how do you guys make money?
So Spherium makes money through the transaction fees. Basically, Spherium, whenever any person does a transaction on the application, there is a 0.3% fees deducted. Out of that 0.3% fees, 0.27%, which is 90% of the fees, goes to the liquidity providers, person who has
Okay.
created the pool or added liquidity to that application, and 0.03% is the fees that comes to the pool where Spherium token holders can gain some benefit. Those tokens, that fee also comes to a pool, and that pool, then we can decide whether we want to burn those tokens or we want to give it away to these people as a airdrop, basically, to the token
Okay.
holders. So
Okay.
yeah, so that is the revenue model of the DEX. Then we have a bridge. Bridge has a 0.5% fee, which is lowest in the industry. And then we have other platforms also, like staking platform. We don't charge a fee at all. It is automatically, people earn whatever the project who has listed their tokens for yield farming might decide that they want to give a 50% return, 20% return, or 100% return. And it is between the project owners who are creating the pool and the people who are adding liquidity, who are yield farming on the platform. We are just providing a platform. We actually, yeah, we want to provide a cohesive ecosystem where you just get all the applications in the financial system at one place, make it as easy as possible.
I like the term yield farming simply because the yield is decided by yield, meaning the rates are also decided by the algorithm itself,
Yes.
based on the platform you're on, or does it protect me from the risk of a downside also?
It does not protect you from a risk of downside. Yield farming, if you try to go deeper into this yield farming concept, a protocol owner who has created the pool normally decides that these many tokens he's ready to give in a on a daily basis or on a weekly basis, and those tokens are added to the protocol. Now if the people who are, and those tokens, now once they are inside the pool, they have to be distributed. It's not that he can take it back. They're not going to come back. If he has added 100,000 tokens to be distributed, then the yield depends upon how many people are there to take a return on the asset. So if they have, if probably he might have estimated that if 1 million worth of tokens are staked, they will get a APY of 100%. And somehow the pool becomes very big and it becomes 10 million, the returns will reduce down to 10%. And if the pool is not 1 million even, and only 100,000 worth of tokens are staked, the people will actually get not 100%, but 1,000% return.
You know, this is fascinating to me, all these things, right? Why should the common man be part of it today, Aanchal? I know you're a chartered accountant, a finance person who became obsessed with the blockchain because you say that why should banks control everything? Why should the rates be determined by lack of transparency, right? What are some of the changes that happen when if this becomes mainstream? Do you really believe that this is going to offer transparency?
So I actually have no issues with the current banking ecosystem. The only problem that I see is that there is a better option available. DeFi is a better option to the current banking system. Now, Bitcoin came into existence after the meltdown in 2008. So someone created, Satoshi Nakamoto created a white paper, floated it around, brought blockchain in the space. Why? Because it was a systematic failure that happened in 2008, where things were in the hands of few wealthy banks who kept on giving loans without enough security. And because of that, there was a huge meltdown which impacted so many people. So many people lost so much. Some of them even lost their life because of that meltdown. And that was because the power of decision was in the hands of some other people. Because when we go and deposit money in the bank, after that, it is not in our hands to take a decision that I want to get it back, get that money back immediately. I have commit, and I don't even know whether that money is being given out to someone who has provided, reasonable amount of security or not. No visibility, no flexibility, no control over your finance. In case
Yeah,
of
for example, all my mutual funds, I have no idea where it's going, why it's going. There is no transparency. So just to make it easy for the layman, would you think you're transparent that way, not Spherium, but the decentralized part of finance? Is that what it's going to say, that this is what's happened to your money on a day-to-day basis, rather than look at intraday trade and say it's gone up and down? You're also going to say that where was the money put in, why was it put in?
public blockchains are all 100% transparent. You can always see how much money has gone in, which all addresses have taken the assets out. And first of all, before putting the money in, you should always read white paper and understand what does that protocol do. Like if you go to any lending protocol, you'll always come to know, they always mention that if you want to borrow some assets, if you want to borrow 100 rupees, how much security is required. So you'll have to stake tokens worth 150. They would
Right.
mention it. And since it's a algorithm, it's a program, these things don't change. If they have mentioned 150, they will not give you 100 rupees unless you put in assets worth 150. And if the value of that asset goes down, so now in traditional finance, what happens? You get a valuation report for the asset and you give it to the bank, and that valuation report is also created by an individual, by a human being, can be manipulated. And the value of asset, like in these times the value of real estate has gone down, the value might go down also. So the
Correct.
loan might not be fully secured at any point of time. But in case of DeFi, this is not possible, because when the value of security goes down, the DeFi applications check every 30 seconds using oracles. Every 30 seconds they keep on checking the the assets which have been staked in return for the loan, whether they are enough to cover the loan amount.
Okay.
If the value goes down at any point within 30 seconds, if the value goes down, they liquidate that asset and still are able to repay back the
Okay.
borrowers, the people who have staked their money.
Okay,
So there is no
this
risk.
is interesting. I mean, the fact that you say no risk is interesting. But you also told me a few minutes ago that there is no guarantee of upside or a downside in this, right? You're saying this is it. It is going to be transparent as to the fact that it's going to say that this is who you've given your tokens to in terms of liquidity. This is how it's being used. But does that person have to do the reporting on the downside? The person who
Uh,
takes the liquidity.
no. So
Okay.
when the liquidity is added, there are places where you can see all the transactions,
Okay.
everything that moves. Transfer the value of tokens can go up and down, and it is a very risky space. Crypto is a risky space. Bitcoin lost 50% of its value in the last few months, which is the most stable asset. And then there are altcoins which might lose even more. I've seen altcoins go down by 95 and 99% also in bad market, in bearish market conditions. So there is a huge risk of downside, and that is the reason it's very important that people first educate themselves in which assets you want to actually invest. When you go to stock market, you at least check which stock you want to invest in, what business that does that stock do, that company does, what has been their financial statements. And if you check those many details, you take a calculated risk. Same is the case of crypto. Every token has an underlying utility, and if you trust that utility, you feel that that utility will be more, because you are actually buying in on not the security or the shares of a company, you are actually buying a utility, because most of the tokens are utility tokens. They are going to be used in the platform. Like ETH or Ether is a token which is required to pay gas fee whenever you do a transaction on Ethereum blockchain. Now the price of Ether has been going up because the number of transactions are going up, number of applications which are being built on Ethereum are going up, and that's the utility. And so that's the reason people trust that particular token,
Okay.
that the demand will continuously increase. But the supply is always mentioned, like Bitcoin has 21 million supply. It's never going to change because it's coded.
Anchal, because it's in beta. Tell us your website. It's Spherium.co, right? What's the website again? Go on.
It's Spherium.finance.
Spherium.finance. It's
Yes.
on beta version. The main one's going to come back in a couple of days, right?
Yes.
So try the beta version. You're saying that for a common man, just go in and experience it at 100 rupees, right? It's based on transaction fees mostly, right? It's as easy as that. So you'll get emails on that okay, you spent X, this is the transaction fee. It's almost like being part of any exchange or any if even if you have a demat account and you're trading in the stock market, it's going to be similar. But only in this case, it's also going into some peer-to-peer lending where they offer you KYCs too. Correct me if I'm wrong, Aanchal, so far,
Yeah.
right?
Actually, you're trying to compare it quite a lot with the
Yeah.
traditional ecosystem.
Yeah, I'm trying to make it easy
Yeah.
for them. So
Make it easy
that's
for
the
them.
reason.
Yeah.
But it is similar, no? But they have to. You're saying trying it isn't believing, right? So you say try and then go
Yeah,
check it out.
try it out. In fact, DeFi is it's not a very simple term, I would say. Moving from Web 2.0 to Web 3.0 is not like, so I mean, how many people knew how to use email or
None
even
of us,
internet
not many, no. Yeah, not many of us
in
knew.
1990s or 2000s? How many
Yeah,
of them knew?
1990s, nobody knew. Yeah,
Nobody
correct.
knew. 2000, few people started creating some basic websites and started to bring something on the web. So it
Correct.
took time for people to learn. Same way, when you are building Web 3.0, Web 3.0 is a marked change from Web 2.0. It is completely decentralized and transparent. So when you're coming to Web 3.0, try to learn first. Try to create a wallet on MetaMask. Try to create a MetaMask wallet, Trust wallet on mobile. Try to create those wallets first. See how they work, and then start
Okay.
interacting with these applications. Like Spherium
Okay.
Finance is not a very simple application. It's a gamut of applications in DeFi space. All the chains integrated. Unless you know what are those chains doing and why these are required, I mean, you'll make a very silly mistake somewhere.
Okay.
And
You
since
know, I
and
want to just take a minute. Go on. Pardon me.
yeah,
Finish it off. Then
one
go
point. There is no forget password in DeFi.
on.
If you lose your private key, you lose your funds. No one is going to come and tell you, okay, you can reset in a bank account, you can reset your password, you can go to a bank. Here you are your own bank. You own your private key. No one has control over your assets. So you are the one responsible for it. So you need to learn to make sure that you are securing your assets.
Okay. You know, I want to just take a pause here because there's a question, and then for guys who are just watching and or tuning in, ask questions. Check out Spherium.finance. Let me spell it out to you. It's Spherium, Spherium.finance. Check it out if you have doubts and come back and ask questions because that's the future of lending, maybe, right? And many other applications we'll talk about. There's a question that I want you to answer. This is Santosh Bishnoi who asks, how can we tokenize physical assets?
Yes, so tokenization of physical assets is something which is many people are actually trying to do it, but there are regulatory issues with this. So, like when there are wrapped assets. Now we are going a little deeper, Vishal.
Yeah, fine.
So,
Please, let's go. I mean, it's a rabbit hole. Man,
yeah,
it's like Alice in Wonderland or it's like Matrix. So what, the red pill, blue pill?
yes, yes. Everyone who goes to blockchain actually takes a red pill. You just cannot come out. You just go
Okay.
inside. So there are concepts called wrapped assets. Wrapped assets in the sense that if an asset is there on a particular chain, and if you want to just create, like Bitcoin has its own blockchain, and if you want to bring it on Ethereum, you wrap it and create a contract on Ethereum chain where you can say WBTC, wrapped BTC. Same way, people are trying to create some wrapped assets, like in the sense which have their value is pegged to the physical asset. Now, the benefit of doing that is that you can even own parts of that asset, like MF Hussein's painting, which cannot be actually owned by a normal layman. I mean, people who are middle class people cannot buy and own. If you can actually divide, I mean, you can make it a wrapped version and divide it into different number of tokens, many people can buy parts of it, and as the value increases, the token price can also increase. So many people are trying to tokenize assets like even real estate. There are some projects which are trying to create tokenized real estate so that people can own part of real estate, part of some big building, and they can earn a return. That if the building is, say, giving a return in terms of rent and everything, say 15-20%, that can be distributed amongst the token holders. So those concepts are being uh, tried to implement, but the problem with them is only that tokenization of asset mean how do you actually link it with the physical world. Like if you own a part of MF Hussein's painting, and you want to gain the benefit of, I mean, selling that. If you see that, okay,
If
that
somebody
painting was,
sells it, so it's
yeah,
on store and I buy a value of that token and somebody sells it, that's when I make money.
yeah, that's when. And if 50% of the people want to sell and 50% don't want to sell, what will happen? So there are a lot of questions which are there, which are in discussion, which are being thought about how to tokenize assets, physical world assets, and it is going to happen for sure because people are thinking about it. People are trying to work it out, finding solutions to make it happen. Like even stocks. So there is a platform which, I mean, pegs tokens of Apple. So Apple shares, when the price of Apple share goes up and down, you can actually buy those peg tokens, and the price of the peg tokens can go up and down without actually investing in Apple.
Very
So
interesting.
that those kind of concepts are coming, but yeah, it's something which has not been done at a big scale till now.
Okay, okay. What about native apps? Native apps are, decentralized native apps are very important. So they can host on Spherium too.
Um, Native apps in the sense the
You
existing apps.
yeah, existing apps. Can they come onto a Spherium platform and say, let's experience blockchain? I mean, instead of being in the fiat world, can we try something out in a decentralized world? Can
Yes,
that work?
so right now we are building most of the applications ourselves, and we are only giving access to the applications which are partnering with us. Like there is an application called Broccoli Network, which is into the social space. So whatever revenue they generate from the application, they use it for growing trees. So
Okay.
it's in the green space, and so they are we are integrating their application, their keys into our application so that people can donate some amount. And there is another application called Lockness, to whom we are giving access through our application. But so all any kind of native application which wants to integrate, they'll have to come to us. We can discuss if it makes sense to integrate it into our application, into the platform, because it's a platform. You can add any number of use cases basically.
Okay, let's wildly talk about a use case. Let's talk about all these, all these lending apps that have come about in India, right? They want to they want to partner with Spherium. This is hypothetically speaking. How would it function? How would a lending platform, for example, work with the Spherium?
So right now, if I talk to you about the peer-to-peer lending space, which is growing very well in India, I would say, I mean, they don't even need Spherium. They're doing very well themselves in the centralized system. See, you have to decide what are the benefits for you to go decentralized. If you're doing well in the centralized space, going decentralized can help if you, with two, three things I would say. One thing is you get global access because the tokens can be moved cross borders without any boundaries, and it is much faster. So if you want to go global rather than being only in India, that makes sense. If you want to bring more transparency, because any transaction on public blockchains is visible to everyone, so if you want to bring transparency and add that layer of transparency, then you can come and integrate with our platform. So if a current application wants to integrate with Spherium, we will ask them to add liquidity to the platform and earn the returns, because that's what they do for their peer-to-peer lending and borrowing also. And the borrowers can actually borrow the funds also from Spherium's lending and borrowing protocol. That product, by the way, is not live yet. It will be live in the next quarter.
Okay. Okay, now there's a question again from Kiriti Kapavari. He says, with the majority of servers being hosted by blockchain providers themselves, such as Ethereum, what are your thoughts about Web 3.0 actually being decentralized or being decentralized?
If someone is telling me that Ethereum is centralized or being hosted, I don't believe it. Ethereum has nodes all over the world. There are Ethereum miners who, and if you go, you can actually check that how you can become an Ethereum node or a miner, and all the documentation is ready. You can, and you don't need to go to any customer service or ask someone how to do it. Everything is available. You go there, permissionless manner, you can become a node. You can start mining with the required equipment, and when you become a miner, you are actually helping the Ethereum blockchain to function. So it's completely decentralized. It is totally transparent in the application. There is no one that owns Ethereum. It's owned by every person that is using Ethereum blockchain.
Okay, well, that's a very valid answer. I think the point that perhaps he's making also is, as blockchain becomes powerful, uh, will the most powerful have more control over the blockchain, and therefore its decentralized value will really go away?
Yeah, see, who will actually have power is the people who hold the tokens of their blockchain. So the more decentralized a blockchain is, like if only a few whales own 90% or 70% of the tokens of a particular chain, that makes it centralized. It is not decentralized in that manner. But if you see that a particular chain has 100,000 token holders, and those wallets, if you see, are quite disparate all over the world, spread across the world. So the people cannot actually talk to each other. How they can actually control the blockchain is that they vote on every decision. So there is an Ethereum Foundation. That Ethereum Foundation is given some funds to run, and that Ethereum Foundation basically floats ideas for improvement of the blockchain. Ethereum Foundation members are all developers, very high-end developers. They float ideas, and those ideas are not implemented unless Ethereum holders vote and let that pass that motion. So it's that's why I mean we live in a democracy in India, right? People vote once in 5 years. In case of blockchain, people can vote every day on every decision.
Don't you think it'll be seriously chaotic at times if that happens?
Chaotic in a way that right now voting is costly on Ethereum. Otherwise, how does it matter? Actually, if you are asked, okay, you hold the shares of say Reliance, and being a shareholder, how many shareholders actually go to a shareholders meeting or vote on an important decision?
Not all of them. Yeah, not 95%.
Not maximum. 95% would not do that. More than 95% don't participate. But if you are sitting at home, have your blockchain in your hand, and you see a motion coming, you just have to click a button and vote. Most of the people will start voting, right? Will decide what is the fate of that blockchain. How does it work? So that it's a completely democratic and open system where you decide as a token holder. And yeah, because Ethereum is very prominent, applications on Ethereum have gained maximum amount of liquidity. Like Curve is one of the application which has a lot of liquidity, and there. But what particular return should be given to what pool is decided by Curve token holders.
Okay, now I want to ask you something important, because I think you need to answer this. I think most of crypto, or 99% of crypto, is gambling. The way it's going, it's like, reminds me of the tulip mania, of the 16th century, or the real estate gamble that we had in 1920s and 30s in America, right? How would you tell people that, look, there is also life away from that gambling, right? What would you recommend people to do? Because this has to become mainstream. The technology itself has proven to be transparent, immutable. That's a story that's told. Everybody from Amazon to IBM want this technology. But for the common man, right? You were very clear whenever you met me. You said, I don't like this gambling part of it. And you want to tell our audience, Aanchal, why shouldn't they go after it? Why shouldn't they go after that part of the subject?
It's actually not gambling. It is like, the problem with this space is that it is very, since you're dealing with algorithms or computers or some programs, and you own everything yourself, there is no one to tell you what is right or what is wrong. There are a lot of scams in this space. There are a lot of applications which are not even built. Someone just creates a white paper, creates some hype, creates FOMO, fear of missing out. FOMO is a common term in crypto.
Correct.
Yeah, just create hype around their own token. Don't create a product later and raise some money. People just go and buy a token where whoever's name they've heard about. Okay, they just hear about it from someone and just they go and buy. People don't put that effort to go check their website, check the white paper, check the use case, or check if the team is genuine or not. Many projects have put fake pictures of people as the project owners.
So they themselves don't use blockchain to verify.
Not blockchain, but I would say that there are certain things that that's why I say that learn first. This is a new system altogether. If you don't know how to use an email, you will lose your password and you'll lose access to your mail. If you don't know what Reliance does, you can actually invest in something which has a little different spelling, like RLI, instead of
I got
Reliance.
it.
You can just change the spelling and you'll go and buy any other stock which looks similar or says I am going to do the similar thing. At least check, verify what that person or what that project does. Do they have a working product, or is it in beta mode, or on some manner something is going to be delivered? Is the team there to talk, to respond to the community? If is there someone that you can trust before putting your hard-earned money into the project? Every
Yeah,
day
that's so true.
there are so many NFT projects coming in. There are so many play to earn
You're
games
saying
coming.
you're saying read white papers, verify those white papers, see if these founders are real. You can do it. And then go invest in a project. Otherwise, don't do it.
Yes.
Don't buy
Yes.
those cryptos. Don't buy those tokens. Fair
Yeah.
point.
If you're buying them without doing all this, then you're gambling. As simple as that.
What about all the exchanges where people gamble at now, at this point of time?
Exchanges where the gamble. All the exchanges.
That's saying people will do it anyway.
Decentralized applications don't stop anyone from listing their token. Any token
Correct.
holder
Correct.
can go list the token. So the application or the exchange, decentralized exchange, cannot control which token is being listed. Period.
Yeah.
It's you who has to decide, because power is being given from authority to you.
So you're saying there's no bank, you're everything. You have to think for yourself and do it.
You have to think for yourself. It's your money. It's your hard-earned money that you have earned by working hard. You have to think whether you want to invest here or not. Either you trust the centralized system which is there in place right now and go invest in them. Let them make the decisions for you.
Okay.
Let them give you the returns that they're offering. Or you take decisions for yourself, invest in the things that you understand. And that's not gambling. That's not gambling if you understand what you're doing.
Got it. Have you raised money at this point of time? Are you going to be raising money?
So yes. So our entity is based out of Singapore. My co-founders are also based out of Europe and Germany. We raised funds in 2020, last year, 2021.
How much was it? It was not public, was it? It was not made public.
No,
Public?
It was made public. Everything is open.
How much is it? How much have you raised then?
We raised $3 million.
Okay.
And that was
through cryptos or fiat? How did you
it was a utility token sale, basically.
Okay.
So we sold around 25 to 26% of the tokens in that sale. With the funds were received in crypto and assets only. And we have already given the returns or in terms of tokens.
Okay. Now I want to ask you, when you raise such money, is it dilution in an equity model kind of a thing?
No,
it's not, right? Yes.
It's not. So we are building an application, a platform.
Got it.
That platform requires those utility tokens. We have our legal opinions in Singapore as well as US about the utility of the token. So that token is going to be used in our platform. In that platform, when we are selling those tokens, means we are actually selling the right for utility of that platform.
It's interesting. It's like the cash deposits of the old days, where companies used to raise money from cash deposits of people and then give them a convertible that it can either be converted to equity in the long run, or they give you back your money with interest or something of that sort.
I would actually compare it with owning a part of a particular application. So if you own say 25% of tokens of Curve, which is a protocol, you own 25% of the voting right over that application. You own 25% of governance right on that application. And as the application's demand grows and utility grows, people start to demand that they want to use the token. That you and the utility of the token increases, the token price also increases, and you actually own 25% of the whole market cap of that particular application. As a company, we can create multiple products as well, but this particular product that we are building, a platform, we when we sold the tokens, we sold that much percentage of our product
And the
altogether.
tokens, they can sell it to somebody else for X,
Yes,
right?
our
Okay,
token
got
is
it.
listed
Got it.
on Gate, which is a
Okay.
centralized exchange, on Uniswap, which is a decentralized exchange. We are going to list it on our own DEX as well, Hyperswap.
Okay.
So, yeah.
Okay, what have you built your company on? What blockchain has Spherium Finance been built on?
Our blockchain, we are blockchain agnostic. As I told you, we are spread across chains. So our applications are launched on Ethereum. We have bridges with Binance Smart Chain.
Okay.
We are adding bridge
It's
with
like an
Polygon
open
as well.
API world in this case, but in the blockchain world, bridging.
See, your contracts, when you're building on Solidity, so contracts are written in a Solidity language. So Solidity contracts can be actually implemented on different EVM compatible chains. We started with Ethereum and Binance Smart Chain. We are going to add support to other chains. So we don't want to be just limited to a particular chain.
Okay, got it. There's 3 more questions. Let's take them because we have 10 more minutes left. This is Shan who says, could you give us an overview or a roadmap for someone who wants to get into blockchain development?
For development, I would say, first of all, if you have a prior background in development, you should go to that, and don't go to just any institute to learn blockchain. It's not required. You have all the information available online. Go and check, search about Solidity development. Some people might know Rust language also. If you know Rust, then you can work on Solana, Terra. Those are the 2 blockchains which are built on Rust, and most of the applications are built on Solidity. So you just go, Solidity is very, very simple coding language. If you have a background, you can just go and start searching how Solidity contracts. All the major applications on Ethereum, like lending, borrowing, or whichever application I can tell, are all open source. So if you want to do hands-on, you can go and check their codes. You can also fork those codes. You can just take those code and copy and create something of your own. So it's very simple. I've seen people become very good Solidity developers in a matter of 6 months. To be honest, we started, one of our Solidity developer was an intern, had an experience of only 3 months in coding. And by the end of month 12, he was he had learned everything that is for coding.
How big is your company and team?
We have about 20 employees. I mean, 2 or 3 keep on coming and going. So yeah, we have 20 employees in the company. We have about 8 developers out of it. And then we have 3 founders, and the rest of the team is mostly into marketing.
Okay. Again, Kiriti asked, what do you think about sustainability with Web 3.0? Is it sustainable? When he says sustainability, it's sustainability in 2 ways. I would ask sustainability from a financial standpoint and also sustainability from an environmental standpoint.
There have been a lot of questions about proof of work kind of blockchains, which require a lot of energy to be run. And there is always 2 views. Someone will come and say, okay, you see what amount of energy being wasted on this and that. But at the end of the day, there are many proof of stake blockchains which don't require any energy. So from green space, that is sorted out. And even Ethereum has decided to move the next version to proof of stake. So proof of work algorithm issue will be sorted out. Bitcoin, I can't comment because I don't know whether they're going to ever move to proof of stake or any other consensus mechanism. They are still mining, but rest of the blockchains, all or most of them, are already on proof of stake or are not using electricity. Ethereum will move. That's from the one point. And from sustainability in terms of financial or economic standpoint, I don't see any reason that this will stop or will not be able to grow, because See, when I entered this space long time back, having any protocol having a liquidity of 100 million was a very distant dream. Right now, there are protocols which have billions of dollars stake in them. And in 2020 and 2021 itself, from in DeFi space itself, the staked amount grew from 15 billion to right now over a billion. So you see, the growth is not like 2x, 3x, 4x, 5x, it's 100x in
Yeah.
a period of 1 year or 2 years. So I don't see any reason that this is going to stop or slow down. Till the time mainstream adoption happens, this is going to grow.
Okay. Next question from Siddhant, and he says, how exactly does one benefit from borrowing from stake pools if they have to provide collateral which is equal to or greater than the sum borrowed?
Sorry, can you repeat the question?
I'll repeat it. It's quite a long-winded one.
Yes.
How exactly does one benefit from borrowing from stake pools if they have to provide collateral? I thought it was collateral free, but in this case, he says if they have to provide collateral which is equal to or greater than the sum borrowed.
See, there are two types of loans right now which are happening. One is where you provide collateral, another where you don't provide collateral, but rather you provide something else as a collateral. Like in case of invoice financing, you provide some invoices
Correct.
and they give you funds in return for it. They probably give 60, 70, 80% of the invoice amount. So there the collateral is the invoice, and that's a different topic altogether. But the case where you have to provide collateral equal or more than the amount of loan that you take, that works in a case where you own some assets. Say you own Bitcoin, and
Okay.
you know that it is that it is going to grow in value. You don't want to sell it, but you still need some liquidity right now for something. You can stake your Bitcoin, get Ethereum, get USDT, convert it to fiat, give it back after a period of time, but so that you don't lose your Bitcoin. Right now Bitcoin is in a very bearish phase. Price of Bitcoin had an all-time high of $69,000. Say you bought at $60,000, right now it is at 36 or $37,000. Would you want to sell? You won't want to. You just want to get some liquidity out, so you will just take those Bitcoin and let it stay there, so that the price, when it goes up, your one Bitcoin still remains one Bitcoin, but the value can go up, and still you have that liquidity of getting 70% or 80% out from the protocol and use it for your activities. So that's the
Okay.
basic premise.
Okay. Aanchal, you've transformed yourself from a finance person to a complete blockchain aficionado and now a founder, of course. This is my final question. Where is this technology heading? I know where is it heading from a smart contract perspective. I'm a fan of.
Mhm.
I've not yet, indulged myself in your realm yet, right? But there is a lot of interest among the fraternity of students and a lot of other founders. Where is it going to be heading in the next 2 years in terms of RBI, right? Saying this is legal because some of you are doing KYC. Where is it going to head in terms of crypto and trading? And in all this, where does Spherium Finance stand a chance? Will you be raising money from traditional VCs also, or you don't need it?
So where RBI, what is RBI going to do, or even what is SEC going to do, or any of the OFEC, what are they going to do? See, I cannot actually speculate on that. What can be done from blockchain ecosystem? Every decent project or every decent protocol which wants to do good is ready to do anything it takes to comply with the KYC AML requirements. They even Uniswap, which has been in this space for last, I think, 3 years, had billions of dollars of volume on a daily basis. Now have told that they might decide to add. They've not confirmed, but it was a rumor that they're going to add a layer of KYC. So it's a completely decentralized system. They wanted to keep it anonymous, but now when they see that there is a risk, or yes, people are not able to participate, from countries like China are not able to participate, anyone who's in this industry who wants to see this industry grow has no issue in complying to any of the regulations. we want the space to be as clean as possible. We all don't want the money from crypto to be used in things which are not correct or right, for terrorism financing or anything incorrect. We don't want it to be used. We are creating technology. We are creating technology which can be used for good or for bad. But if we can do anything to make sure that it is used only for good, we are ready to do it.
Okay.
Yeah. So from our end, we are going to do whatever it takes to make it as compliant to any of the regulations which are brought in by any government of the world, because it's a global product. It's a global organization. We want people from all the countries to participate. So whatever is required, we'll do it. From regulatory standpoint, we are seeing many positives also coming up. Many countries accepting Bitcoin, like El Salvador accepted it as a medium of exchange also. Many countries taking very positive steps. Singapore has very forward looking regulations when it comes to crypto assets. I don't even call it currency, to be honest, because it's not currency, it's asset. So they have a very positive outlook towards, Singapore has a very positive outlook towards crypto assets. Countries like UK also are taking a positive stance. They just want to control the misuse of assets, and we are all together to do that. We want to do it. So
That's
that
wonderful,
is,
Anshul. So I'm sure that everybody's going to be fascinated with it and a lot of experimentations. My question on you raising money from VCs, is that something on the cards?
um, that is something we right now we don't need. Till the time we don't need it, probably will not do it. What we are going to right now focus is on getting the product out and getting the adoption. We want to see the product market fit. We don't want to raise any funds from VCs unless we are able to give them good returns on
Yeah.
whatever they are investing in.
No, I got it. At the moment, you're issuing tokens, and the tokens can be converted to fiat money in countries like Singapore and Germany and used to build a team, right? That's what you're doing at this point of time.
Yes, yes.
Okay. No, guys, do check out Spherium.finance. That's the lovely Aanchal Thakur for you. She is a finance professional who became a technologist and is obviously an aficionado of blockchain, not just blockchain, but also its immutability and transparency aspects. That's why she's gone ahead and become the co-founder of Spherium.finance. She believes that you could participate even with 1 rupee or even 100 rupees, and you can see how the money is being exchanged or liquidity provided to various users. All right, correct me, Anchal, again if I'm going off track, because I would perhaps go try this now that I haven't done it. So that's how Spherium works, right? On a closing note.
Yes, yes, please try to use it. All the products are not out on mainnet yet, so you'll see lending and borrowing come at a later stage. But yes, you'll be able to do whatever you do on a centralized exchange, buy, sell tokens. You'll be able to move to different chains, move your tokens from Ethereum to Binance Smart Chain to Polygon to Avalanche. World is open. Basically, the whole
World is
blockchain
open and it is safe. She's going to manage that. She's going to do KYC, so you can decide who do you want to give the money to or not, right?
Yeah.
Go check out the tokens in Spherium.finance. I hope you love this decentralized finance session. We can have her back for more. Anjay will perhaps do a blockchain event or some kind of a panel. Go dig deeper into the subject, because each of these, for example, staking itself is different. DEX is different, right? We need to go deeper into each of these. We'll perhaps do this again.
Sure, sure. I'm always
We'll
available.
call in a
for
couple
you.
of more people and talk.
Yeah. I'm always available. If people want to learn, if people want to know, we are always available. My whole team, we keep on providing information and knowledge on different platforms. We try to associate with as many platforms as possible to give people education, because the only thing that is missing from this space is educated people, educated investors in this
There
space.
you go. And there you have it. It took the stock market 30 years to get retail investment in a high. And I'm sure even with this, it'll take a lesser amount of time because of technology. Ladies and gentlemen, thank you for being on Pebble by Co-Create. I'm your host, Vishal Krishna, and my guest is Aanchal Thakur, the co-founder of Spherium.finance. We'll have her back again. This is just the tip of the iceberg. There's more to go on Pebble, more founders to come, more questions from you, of course. Go like us on YouTube and link